Recession is the word in everybody's mind and on many news headlines. And if you felt worried about your money, don't panic. Recessions don't have to be scary. In fact, they can actually be great times to invest and make money. In this video, we're going to talk about how to invest during a recession, even if you're a beginner. I will cover stocks, bonds, real estate, cryptocurrencies, and even cash. We'll break things down simply so you can understand what's going on, how to make smart choices, and why recession might just be the best time to make your money work for you. By the end of this video, you know what to do during tough economic times to protect your money and make more. Plus, we'll talk about how to stay calm and confident while you build a strong financial future. Let's do this. Before we get started, let's quickly talk about what a recession is. In simple terms, a recession happens when the economy starts shrinking. It's when businesses make less money, people lose jobs, and things start getting more expensive. In other words, it's when the economy slows down for a little while. But here's the thing, recessions don't last forever. In fact, in the past, most recessions have lasted less than a year. They come, they go, and things eventually get better, but during recession, stock prices usually drop, which might make you feel nervous, but don't worry. Recessions can also be great opportunities to invest because things become cheaper. If you know how to invest smartly, you can actually make lots of money. The key is to stay calm, keep your cool, and use the right strategies. So let's talk about how to do that. When the economy is in a recession, it's easy to feel like every day is falling apart. Stock prices are lower and people worry about losing money. But here's the truth, recessions are part of the economic cycle. They happen and they are followed by times when the economy grows again. If you play it right, you can make money when things are low. A good example is the 2020 crash just a couple years back. The stock market went down a lot and people were scared. But those who bought stocks at that time made huge profits when the market recovered just a few months later. So even when things look bad, they won't stay bad forever. Markets tend to bounce back, and investors who stay invested and keep adding money during the dip can make great returns. The bottom line, don't be afraid of a recession. Instead, see it as an opportunity to buy things at a discount. When everyone else is scared and selling, you can be the one buying things at a lower price. And that, my friend, is how people get rich over time. Let's talk about some specific ways you can make money during a recession. Let's start with stocks, meaning buying shares in companies like Apple, Tesla, or Coca-Cola. When a recession hits, people often sell their stocks because they're afraid. This makes stock prices drop. Now, if you're just starting out, this might sound like a bad thing, but it's actually good news for you. Why? Because when prices go down, it's like everything is on sale. Imagine you're at the store and your favorite shoes are 50% off. You'd buy them, right? Well, stocks are kind of like that. When prices drop, you can buy high quality companies at a discount. But not all stocks are the same. In a recession, you want to focus on defensive stocks. These are companies that make essential products that people always need, like food, medicine, or utilities, like electricity and water. For example, people might stop buying new cars during recession, but they'll still need food and medicine. Here's how to do it. Focus on defensive sectors. Look for stocks in industries like healthcare, utilities, and consumer staples. For example, basic products like food, drinks, and cleaning supplies. Buy quality companies. Companies like Apple, Microsoft, and Coca-Cola are big, solid businesses that have survived tough times before. They have the cash to keep going even when times are tough. Use index funds or ETFs. If picking individual stocks seems too complicated, you can buy a fund that holds lots of different stocks. This way, you're not putting all your money into just one company. Index funds and ETFs are an easy way to invest in the stock market and get diversification, which helps protect your money. Example, in 2008 during the Great Recession, the stock market dropped a lot. But those who bought solid companies like Apple or Amazon during the dip saw huge returns as the economy bounced back. So when prices are low, buy stocks on sale. Next, let's talk about bonds. Think of bonds like loans that you give to the companies or the government. In exchange, they pay you interest. The great thing about bonds is that they're usually a safer investment compared to stocks. So when the stock market is falling, bonds can help keep your money stable. Why are bonds good in a recession? When times are tough, investors often move their money into bonds because they're safer. This means bond prices can go up when stocks are down. Bonds also pay you regular interest, which is nice during recession when you're trying to get steady income. Here's how to use bonds during recession. Buy government bonds. Government bonds are considered safe because the government usually pays them back. Usually, US Treasury bonds, for example, are low risk. Look for high quality corporate bonds. You can also invest in bonds from strong companies. These usually pay higher interest rates than government bonds, but are still as safe as long as the company is stable. Consider bond funds if you don't want to buy individual bonds. You can buy a bond fund which spreads your money across many different bonds. This helps lower risks. Example, in 2020 when the stock market crashed, US Treasury bonds went up in value. So if you had your bonds in your portfolio, they helped protect you from the stock market drop. Bonds are your safety net when the stock market is unstable. Let's move on to real estate. Buying property like homes or apartments, real estate can be a great way to invest even during a recession. Why? Because during a recession, people may not be buying homes, which can cause property prices to drop. This creates a great opportunity to buy real estate at a lower price. Real estate is also a good investment because it gives you rental income. So even if the property value is down, you can still make money by renting it out. Here's how to invest in real estate during recession. Buy properties at a discount. When property prices drop, it's your chance to buy at a lower price. You can then rent out the property or sell it later for profit when prices go back up. Invest in REITs, real estate investment trusts. If you don't have enough money to buy a whole property, you can invest in REITs. These are companies that own real estate, and when they make money from renting or selling properties, they share the profits with you in the form of dividends. REITs are a great way to invest in real estate without needing to buy property directly. Example, during the 2008 financial crisis, property prices dropped a lot. Investors who bought real estate during that time saw huge profits when the market bounced back a few years later. Real estate is about long-term thinking. It's not about making quick gains, but about building wealth over time. Now, let's talk about cryptocurrency. Digital money like Bitcoin or Ethereum. Cryptocurrencies can be very risky, but they can also bring big rewards. Some people think cryptocurrencies are like digital gold, meaning they could act as a store of value during a recession, especially if inflation is high, but that can be argued for or against. Here's how to approach crypto in a recession. Invest a small amount. If you're new to crypto, don't put all your money into it. Start with a small portion of your portfolio, like 5 or 10%. Crypto is highly volatile, meaning its price can go up or down a lot in a short time. Look for the big players. Stick with well-known cryptocurrencies like Bitcoin and Ethereum, which have been around longer and have a larger user base. Avoid buying risky altcoins or meme coins, which are smaller cryptocurrencies that can go to $0 in value. Be patient. Crypto isn't a quick win. If you invest, be prepared to hold onto it for a long run. Example, in 2020, Bitcoin and other cryptocurrencies dropped sharply during the initial 2020 crash. But after that, Bitcoin exploded in value, and those who bought it when it was low made big profits. If you decide to invest in crypto, just be prepared for the ups and downs. Cash is king during recession. While it's not an investment per se, having cash gives you the flexibility and safety when the market drops. It's important to have cash on hand so you can take advantage of investment opportunities. Here's why cash is important. Opportunity fund. Having cash means you can buy stocks, real estate, or other assets when they're cheap during a recession. You'll be able to act quickly when the market hits rock bottom. Emergency fund. It's also important to have cash set aside for emergencies, like job loss or medical expenses. That way you won't have to sell your investments at a loss if something unexpected happens. Earn interest. Cash doesn't just sit there. You can put it in a high yield savings account or a money market fund where it can earn interest. While it may not make you a ton of money, it's a safe place to park your cash. Example, during the 2008 financial crisis, many investors had cash on hand, which allowed them to buy stocks, bonds, and real estate at discounted prices. When the market recovered, those who had cash made a lot of money. As I've said, investing during recession can be a great way to make money, but it's important to protect your money too. Here are some tips to stay safe. Diversify your investments. Don't put all your money into one thing. Spread your investments across different assets, stocks, bonds, real estate, crypto, etc. to protect yourself if one thing drops in value. Have an emergency fund. This is money set aside for unexpected events like losing your job, making sure you have 3 to 6 months of living expenses saved up so you don't have to sell investments in a panic. Don't panic sell. Recessions can be scary, but selling your investments in a panic is usually a bad idea. Stay calm and stick to your long-term plan. The key is to stay calm, be patient, and think long-term. Recessions can be a time to buy assets at a discount, and if you make smart decisions, you can come out ahead when the economy recovers. Remember, a recession doesn't last forever. Keep your investments steady and use this time to grow your wealth for the future. If you like this video, please subscribe for more investing tips and leave a comment below. What's one strategy you're excited to try during a recession? Thanks for watching, and I'll see you in the next one.